All right, so Andrew Hart here again, and welcome back. Let's take a look at these charts here going forward. What happened last week and what we really expect to happen next week. First off, let's look at the XL. Let's take a look at XLF, being your most broad-based financial ETF. And once again, here we're on the tools section of ETFTRADR.com under the free stock charts. And we can take a look here on the daily first off. I want to take a look and show you that there's obviously going to be some clear resistance here. What's important about the financials this week? Well, the Fed rate announcement and just the Fed basic meeting notes will be released on Wednesday at about 2:15. So that's going to have a broad impact on things like bonds and certainly on a lot of these financials, especially considering what the increased control that the Fed has got and, of course, the increased scrutiny on all these financial companies. So a lot of them wanting to repay back a lot of their debt. We'll see what happens. Clearly something that will make the news. Will it impact the charts? Well, I can tell you one thing, that there's definitely resistance here. Just from a clear basis of what's gone on in the last few weeks, we're headed up to some recent resistance. Let's see how far back that resistance goes. And boy, is that telling of financials. You can see here that there's a lot of charts that have gone much higher over the same time period than XLF. It's been really stuck in a long-term trend, or range, I'm sorry. But we're looking at least in ETF Trader with the element system that we've been talking about in the emails that you receive. We're looking more on a little bit more short-term daily charts, which we've been able to capitalize on this past big move in XLF. You can see there's definitely some resistance here at, what is that, roughly around 1580, so 1575, 1570. But before we get there, that 1550 level is going to be fairly key, just from a round level. I'd like us to get us above last, basically, what is that, January's highs. Otherwise, here we can look at probably a potential short period if we do find resistance there. I think, and I see more often than not, once you meet resistance one time, which in this case it would be the first time meeting this resistance again. Actually, look at that. It goes all the way back to October, September, all the way back over here. This would be actually the third time that you've reached it. On that third time, that resistance or support, if it's on the downside, becomes less and less significant and more likely or probable that you're going to break through it, right? Because you're testing it more often and more often, the more likely you are to break through it. So XLF has a little bit more up to go here. I do think that you're going to see a little bit of chop before and ahead of time, probably on those hourly charts ahead of the Fed on Wednesday. We'll have a little bit more about how to what to look at here for the Fed. Let's take a look at let's see, XLY. XLY has been huge. This is, of course, the consumer discretionary. It's been going gangbusters here. But what's been really driving this? XRT, of course. XRT, another one that we've got calls in. We've been, what I consider, Elements is a great system. As you've been reading everything, tomorrow you're going to receive an email about the exits in Elements and really what we do, how to diversify your exits. But more importantly, we do want to focus on the leaders in the market. You can see this, that right now we've been closing down profits on XRT, XLF, and next SLX. SLX, another one. I believe there's still a lot of opportunity in SLX. This is actually one that I recommended at the beginning of 2009 for all of 2009. The ETF was up about 100%, was my top recommendation for 2009 out of the four that I made. All four being up. The market was up, so not terribly difficult, but at the same point in time, this was a leader in 2009. I still believe we've got minimum. We're going to test this upper recent high that we had back in January, which is around 68.50, trading right now at about 64. Another $4 to go. You can see here that we also just closed above the acceleration bands. 2 consecutive closes above acceleration bands. What is that? That's one heck of a strong trend that is likely to continue over the short term. Now, one of the great things I wanted to show you about the website here in the next 30 seconds is our new tool. The new tool is called the ETF Screener. When the Fed comes out, what are the biggest movers going to be? The biggest movers are going to be the short-term bonds, those 1 to 3 year bonds, 3 to 7 year bonds. In particular, I like the SHY. You can see here we have an ETF tree, as I call it, over here on the left side. And I'm going to go to, let's see here. Here's long-term bonds, and I can choose between that. Lots of information.